Hello traders and welcome to another video review. Today is Tuesday, June 9th, 2026. Let's take a look what do we have in the economic calendar for today. So only two very important, high important data releases for today. One is scheduled for release at 4 o'clock. Existing home sales from the USA is scheduled for release, and 2 hours later at 6 o'clock we got short-term energy outlook from the USA as well. So those two events might cause a little bit of the movement on the market, so please stay focused, stay vigilant. We are still waiting for those events during the middle of the US session. Now, without any further ado, let's switch to the charts and we start with Euro-Dollar. Euro-Dollar 4-hour time frame chart moved towards the level of 1.1501 basically, and bounced, as you can see, a little bit higher from the extremely oversold conditions. So we have the bullish engulfing pattern here where the technical support is being still tested. So first defense of the technical support bounced towards 1.1555, so roughly 55 pips. US dollar is 55 pips up from the lows, and the momentum is at the level of 41, so it's still below the level of 50. The nearest target is 1.1577, which is the technical resistance, and it might be crucial for the bulls, because any breakout higher might be considered slightly bullish. Nevertheless, there is a lower channel line just above this level, as you can see here. Just above this level there is lower channel line, so that might not be that easy. So generally the outlook remains bearish, with the wave Y still expanding to the downside on Euro-Dollar. Cable bounced as well from 1.3305 towards 1.3373, where the technical resistance is, and now this technical resistance is being tested. The bounce was from the extremely oversold conditions. Now the RSI is 43 points, so it's still below the level of 50. The same situation is being played out here on the cable, as the current movement to the downside might be developing into more complex and time consuming one. So we might see further movement to the downside, especially if this low A low and the level of 1.33 is clearly violated. Any breakout below this level, however, 1.3158, would invalidate this whole impulsive scenario here. Okay, and then it would mean that deeper movement to the downside is in play. US dollar versus the Japanese yen steadily pumps higher. Swing high for now is 160.41. A little bit of the pullback, dips are being bought, as you can see, and we are back above the level of 160 yet again, with quite positive momentum, 55 points. Next target is 160.47. So please stay focused, stay vigilant. This is the situation where the market is moving higher. Next target 160.73 or even higher. For now we are waiting for a breakout out of this range. Big range. You know it. You know exactly where this range is located. We've been talking about it for many days. So right now this situation looks bullish as well. Gold market, well, a local low 4,268 after the failure to break above the orange trend line. We are testing this technical resistance here, 4,350, but for now the bounce from the extremely oversold conditions didn't actually work very well. We just need to move way higher, and seems to travel towards the level of 4,454 if bulls wants to regain the control over the market. Nevertheless, as we remain this scenario at least few times, let me just remove this Fibonacci, there you go, we still have wave W, wave X, and now the wave Y to the downside is being developing, right? So is being developed. So right now, the developing of this wave is still in progress, and we should see lower levels on the gold soon. S&P 500 stays below the local supply zone for 7,500, roughly around the 7,500 level. The swing high, the yearly high, and the all-time high is still located at this level here. So that's the major point of reference, 7,620, and the market is trying to do some kind of a pullback back from the extremely oversold conditions. Nevertheless, this movement to the upside looks very, very limited, and we should see further pressure. If we get towards 7,500, we should see further pressure. Failure to break above this level might create another pressure to the downside, and this correction, which is the biggest correction in this whole movement since the lows at 6,300, might get even bigger in that scenario. Crude oil reversed and removed recent gains. We got the technical resistance located here, 95, I guess this is 96, 97. So the situation here remains bearish. Retail gap from Monday is filled, and now we are back below the level of 90, current price 89, 90 something, local low 89.69. And we might finally feel this blue gap, which is the gap from the end of the April 2026, right? So please notice crude oil a little bit on the pressure. Bitcoin is bouncing a little bit, not too much, is bouncing, and it already looks like this movement to the upside is exhausted. We might treat this movement to the upside as the bounce from the trend line, even where the market found a support, right? Fine, we got very nice pin bar here. We have a bounce to the upside, local high 64,201, but this is already the neutral level of 50. So right now we will either break above local technical resistance $65,000 basically, and then travel further towards 70,000, or there will be a failure and further movement to the downside is being expected. So the current situation on Bitcoin is still quite bearish. We recovered in the short term from the extremely oversold conditions. How this looks on the daily, we are trying to recover. We are still not even above the level of 30. So this is the battle of 60,000. If bear win the battle of $60,000, next target is roughly around $53,000, $54,000. So $7,000 lower. So please stay focused, stay vigilant, keep an eye on the situation here, keep an eye on the current situation. We will see how this will go very soon, I think. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.